Today we will look at another special journal. This one is called the Purchases Journal. And this is kind of the opposite of the sales journal we had in the last couple days. On your screen you see an example. This is the Purchases Journal for the corner grocery store, and some transactions have already been entered. Let's take a look at the parts of the journal. On the left, as always, the date column, date of the transaction. Next column is account credited. If you remember the sales journal had this column labeled account debited, and the companies or the people involved in that journal were customers, and they owed us money. So their accounts work the same as the accounts receivable account in that it is an asset, and assets increase on the debit side. This is the opposite. These are accounts that are credited. These are not customers. These people are creditors. We owe money to them. So it works like accounts payable. Accounts payable is a liability, and when we increase a liability, we credit it. Same way here. These people are people we owe money to, and we'll come back to that in a moment. Next column is the source document column. Purchase number, in this case, refers to what we call purchase orders. That's what the PO means. Purchase order, in this case, number 232. It's a written evidence that we are buying something and charging it. So that's our source document. Posting reference column we'll come back to. And then this column is the single amount column in this journal. So it's fairly simple because there's only one amount column. But it has two headings. Purchases debit. If you remember back when we first introduced this back last semester, for some reason, traditionally, the word debit in accounting is abbreviated DR. We don't need to go back and explain why that is. It's just that's the way it is. So when you see DR, in this case, it means debit. So the heading is purchases debit and accounts payable credit. So whatever's in this column will be put into two different general ledger accounts, the purchases account and the accounts payable account. So let's now look at some transactions. Over on the right, we have a transaction, January 10, purchased on account from Produce Suppliers Incorporated, $686.95, purchase order 232. And it's already journalized for you, the date, the name of the creditor, the source document, and the amount of money. Now, one point with all these amounts of money, what you don't see in this journal that you did see in the sales journal was a column labeled sales tax. Now, that's because the seller is responsible for collecting and paying the sales tax. We are the purchaser here. So the $686.95 that we owe to the Produce Suppliers Incorporated includes sales tax. We don't have to separate it out because we're not going to account for it in our books. It's already part of the total. When it's paid to the Produce Suppliers Incorporated, they will have to separate out what is the sale amount and the sales tax amount. So an important concept here. All of these three amounts in a purchases journal includes not only the sale price, but also the sales tax. So that's what we have to pay. We have to pay both amounts. So let's look at the second transaction, purchased on account from General Mills Company, $972.20, purchase order 233, and again, the date, the creditor, the source document, and the amount, which includes the sales tax. And the third one, same way with Borden's Milk Company, we have the date, the creditor, source document, and the amount. So, very simple. And again, this kind of company, a grocery store, as you might imagine, buys things on a regular basis, on a daily basis, and there may be many more transactions on January 10th, and they're all done the same way. At the end, you will see a total, and that's the amount of money in this case just 3 transactions, but the total amount of money that we purchased on account. That we will have to post. We're not going to do that now, but eventually that will be posted. And as we did with the sales journal, it's simplified because we don't have to go to the accounts payable account, for example, and do all of these individually. We just do the total. In fact, this total goes to 2 accounts. Again, the heading of the column tells you where it goes. You go to, first of all, the purchases account in the general ledger, in which, let's say, for example, it's 501, and that amount, that total, would be debited in the purchases account. To show that it's been posted, we would put the account number. Now, it also, at the top of the column, says accounts payable credit. The same amount, the same total, has to be credited to the accounts payable account in the general ledger. So that will need to be indicated as well if we have already posted this. Let's assume it's account number 201. So if this is at the bottom of the page, this indicates that this amount has been posted as a debit to purchases, and this amount has been posted as a credit to accounts payable. So the accounts payable account, for example, tells us the total amount that we owe. Obviously important to the owner of the business. But we need to know how much we owe each of these creditors as well. So their individual amounts are posted to their account. They have an account. Each one of these companies has an account in a subsidiary ledger that needs to be posted. Let's assume for the sake of argument that this is account number 201.1, and that would indicate that this amount, $686.95, has been credited to this company. And we look at the next one, General Mills, and let's say it's 201.2. If that's already posted, that means the $972.20 has been credited to the General Mills company, to that subsidiary ledger account. Same way with the next one. We'll assume that's the account number. The 21083 is credited, as you see there, to the Borden's Milk Company. So we can look at the subsidiary ledger and see quickly how much we owe to each one of these companies. If we want to know the total, we can go to the accounts payable account in the general ledger and see the total amount. And this is done every day. Remember that the accounting cycle is not the length of one day. It's typically a month or a quarter or even more. So this is not necessarily meaning that we're posting at the end of the quarter. I mean at the end of the accounting cycle. This posting can be done and should be done every day because we need to keep our books up to date. So the posting is done every day. The accounting cycle, maybe a month, maybe 6 months, maybe a year in some cases. That's when we make the financial statements of the income statement and the balance sheet, etc. So now we have looked at 2 journals, and they're very useful for companies that sell a lot of things on account. They would use a sales journal, and a company that buys things on account on a regular basis, as we see here with the grocery store. So at this point, I would ask you to go back to your course page. There'll be a problem for you to do, and you need to do some journalizing into a purchases journal.